What's going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I earned $440.07 with Approach Shares Bitcoin ETF. It's going to be going into some ETFs that are high yield ETFs that I added to my arsenal of the dividend portfolio. Now, yes, I like WPay. I like the weekly pay ETFs. I like, some of the options income ETFs with YieldMax, the portfolio options income ETFs. And I hope M1 Finance actually adds SOXY. I think that's a really good YieldMax ETF that's very underrated. Does have a little bit of a high expense ratio, but I'm an income investor, a high yield income investor. Yes, I have dividend growth. It's good to be balanced, but this incomes is going to be going into something that are really, some of these three I would say are underrated. And I'm going to point these out that I'm adding. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these ETFs right now. And how many times are people sick of seeing QQQ, QQQ, QQQ? But what about QQQX, the Nuveen Nasdaq 100 Dynamic Overwrite Fund? I really like this one, and this one is really surprising. And this caught my eye because I had to get it. I had to buy these shares. I was very attracted to it. So there are some potential benefits. Broad market opportunity, reduced volatility, and tax advantage distributions. It offers the potential for regular distributions from qualified dividend income, long-term capital gains, and return of capital. The fund is designed to offer regular distributions through a strategy that seeks attractive total return with less volatility than the NASDAQ 100 index by investing in the U.S. equity portfolio that seeks to substantially replicate movements of the NASDAQ 100 index, as well as selling call options on 35 to 75% of the notional value of the fund's equity portfolio. And it says in parentheses, with a 55% long-term target, in an effort to enhance the fund's risk-adjusted returns. The strategy will consider the fund's tax position and employ techniques to improve after-tax shareholder outcomes. So this is the original investment value. You put 10K in, it'd be 13,305. This is original investment and distributions right here, 2783. And the original investment with all distributions reinvested. So this one's cumulative. This one is all reinvested. So not too bad for the value. So again, the distribution rate is 8.14%. NAV distribution rate 7.34%. 1 year total return on NAV 20.06%. So you got a quarterly distribution of 56%. So right here we have 56%. Let's go since inception. So you can see it going up, which is good. So let's go to let's start in 2016. 35 cents, and then 2019, 39 cents, and then it hit the 40 mark in 2022. 2024 and 5, it's at the 56-cent mark. So that's good. The most important thing is expense ratio too. And it has an expense ratio of 0.89%, so be aware of that. So here's its holdings. It's semiconductors and equipment, software, interactive media and services, technology and hardware. Top portfolio positions: NVIDIA, Microsoft, Apple, Amazon, Broadcom, Tesla, Meta Platforms, and we have the GOOG and GOOGL and Palantir. So very good companies. We have a distribution rate that's going up, and the NAV is going up. Win-win scenario. Let's jump to the next ETF. This one will surprise you. The Curve Technology Titan Select ETF. Sitting at 2902. This is one of my favorite curve ETFs. And I own a lot of curve ETFs. I am a fan of them. This one is unique, and we need to check this out. M1 Finance added them, and I'm very excited. So first, we have a distribution rate of 17.7%. So here's some benefits. To seek maximum growth, names are weighted based on momentum signals. They write covered calls to generate income on a stock with a limited upside potential or low price momentum, which can also serve as a downside mitigation. The dynamic optimization, balance in physical and or synthetic company exposure. Okay, we got that. Removing non-technology companies to help gain power exposure, or I'm sorry, pure exposure to the technology growth stocks through smart security selection. So we have a little bit of a high expense ratio, 1.12%. Be aware. So now right here, here's some of its holdings. I wanted to go over that. Alphabet, Amazon, Broadcom, Apple, Meta Platforms, Nvidia, Netflix, and Tesla. That's one thing. Here's their distributions that have gone up, and this is what I like about it. 8 cents, 2024, 14, then you see 15 in 2025, then you see 25 cents, and now you see 45 cents. So you're getting a pretty good bang for your buck, and it's increasing, which is good. So also, and the final one that I'm going after is the NestYield Dynamic Income ETF. Symbol is EGGY. I'm going to go a little bit into why I like it. EGGY is built for investors seeking high weekly income without sacrificing long-term growth potential. So this is actively managed and strategically focused. Targets an average annual yield of 25% through a selective cover call strategy applied to a concentrated portfolio of 10 to 25 NestYield's highest conviction holdings. So we have an expense ratio of 0.95%. Its distribution rate is 17.68%. Here's its distribution. So we have a pretty good distribution rate. 83 cents, 95 cents, 73, 73, 78, 82, 83, 81s, 87s. That's not bad at all. Top 10 holdings: AppLovin, Broadcom, Nvidia, Palantir, Robinhood Markets, Vista Corp, Micron Technology, Advanced Micro Devices, Tesla, and Take-Two Interactive Software. So using the income for BTCI, I'm sorry, BITO, I'm buying these ETFs. I think there's, as an income investor, I'll just say this, as an income investor, there is potential to earn high yield income. Now, I am a dividend investor, and I also am a dividend growth investor. These are ones that in the future that I could flip and feel confident on in the future, that my income should be a little bit more stable compared to the weekly pay ETFs. I'm not a full firm believer of the weekly pay ETFs for retirement. As I told you with the YieldMax ETFs, with the synthetic call ETFs, the reliability is not there. How would you feel making 70 cents one week, okay, per distribution, then making $1, and then if you're lucky, maybe 65 cents. So, and then you look at HOW or WPay, sometimes it's up, sometimes it's down. Now I own those shares. I really love them for income. And I made up to $8,000 in passive income. But we have to think about long term and what happens when the market goes bad. We have good holdings in here. Now, ULTI doesn't have good holdings, and that's why the NAV dropped. ULTI is at a risk for a reverse split. Misty's at a risk for a reverse split. Honestly, it's never good when you get a reverse split. So think about that. These don't appear to be at a risk of a reverse split. Now, I'm not giving financial advice. It's for entertainment purposes only. And again, you should go to your financial advisor for financial advice. Go to your tax advisor for tax advice. Please do that. You shouldn't be buying things because I buy things. Just being very straightforward. You have to do your due diligence when it comes to investing. You can lose money. I've lost a little bit of money this past week. Be aware of the risk when you go into investing. This is why I tell you, just watch my channel for entertainment purposes only. I'm just showing you what I'm doing. You shouldn't be mimicking it. And again, my financial situation is way different than yours. So I just want to be very clear. I'm just, you have to be very careful with your investments. And this is why you go to a financial advisor. Take care. Have a great Sunday.